The stock of Gores Guggenheim, a special purpose acquisition company, holds a promising future for its investors with its most recent reverse merger with Polestar, a Swedish electric vehicle company. The proposed deal is expected to be completed before the end of the first half of 2022. But how will the merger between Polestar and Gores Guggenheim boost Gores Guggenheim stock to $100? Stay with us to find out. But before we do that, don't forget to like and subscribe whenever you feel like it, as this is the best way you can show appreciation for the videos that we produce. Thanks a lot, my friend. When it comes to electric car startup companies, it is always best not to judge a book by its cover. Polestar is one important stock of value that attained 185% year-on-year growth in 2021 after delivering 29,000 electric cars. It is visible that this budding enterprise is breaking ground more than expected and achieving admirable feats. In 2021, Polestar had a total of $1.6 billion in revenue, with very ambitious plans for years to come. But with the proposed merger with Gores Guggenheim, more catalysts could boost the price of the stock. Electric vehicles are not new, but they have started to gain traction in recent years in the stock market. However, a lot of uncertainty still hangs around them. Will they eventually become the norm in the market, even though buying them is quite expensive? We don't know that yet, but it's a high possibility. There are no risky investments like investing in electric vehicles, especially if done without thorough research. This can lead to losing all of your money and even your time, not to mention the emotional trauma it puts you through. This situation is made complicated by the fact that many of these electric vehicle companies are startups and operate at experimental and developmental stages. As a result of this, most of their trading is based on their inherent potential more than anything else. Polestar is quite different from most of these startups. During Polestar's launch, two great companies came into a partnership to achieve a successful launch. The partnership was between Volvo and Geely Motors in China, a company that holds an authoritative position in the auto market. Geely sold over 1.3 million units in 2021. Apart from this impressive foundation, there are other factors that Polestar is bringing to the table. An example of such a factor is Polestar offering several unique options for their investors and customers willing to make the switch to more environmentally friendly forms of mobility. Polestar's lineup of cars includes the Polestar 1 and Polestar 2, with plans of releasing 3 more models by the end of 2025. The company is expecting that by then, it would have sold over 290,000 cars and would have pulled in $17.8 billion in sales. In the auto industry, Polestar is doing well above most electric car companies. For instance, Lucid, which slashed its production target for 2022, which drained most investors' capital and led them to some serious financial problems. Polestar, on the other hand, does not suffer such a fate. And for the past few months, it has offered lots of exciting benefits and a promise for more. These are a lot better than what their competitors have to offer. Polestar has exciting benefits, and they include early adoption, a high return on investment, and higher variability that will last for a very long time. But then again, don't forget we earlier mentioned that investors are kind of shying away from growth stocks. Well, you should know that this isn't the same for Polestar or Gores Guggenheim. But we can't deny the existence of some bearish concerns hovering over the company. Let's take a look at them, and perhaps put your mind at ease about them. In the past few years, several special purpose acquisition companies for electric vehicles have risen and somewhat disappeared. And usually, it is always a story of investors making some changes to the stock price immediately after the merger closes. But with Gores Guggenheim and Polestar, their case might be a lot different. Did you know that in all of Polestar's existence, the budding electric vehicle company has stayed away from major issues? However, this doesn't mean it won't encounter issues. But then again, take a look at Lucid. We are not saying that this event is a constant one, but we can't overlook the possibility of just one bad press release and how it can lead everything downhill. There is also this skepticism over companies connected to China. It is important to note that Polestar is a Swedish enterprise and not a Chinese one, and it is not structured like a variable interest entity. If you ever doubt that, remember that Polestar has attained a global status as an electric car company and has plans of strengthening and increasing its reach to other countries it hasn't reached. They plan to do this by creating and setting up more manufacturing factories that could boost their worldwide sales network. Polestar's proposed merger with Gores Guggenheim is expected by both analysts and investors to accelerate Gores Guggenheim's growth. The proposed merger between the Swedish electric car company Polestar and Gores Guggenheim, the special purpose acquisition company, is quite a gigantic deal. The two companies have a combined enterprise value that is larger than $20 billion, and they have cash proceeds above $1 billion. This is a clear sign that the stock of Gores Guggenheim is heading to $100. But what's not clear is when. According to Thomas Ingenlath, the chief executive officer of Polestar, the proposed merger between Polestar and Gores Guggenheim will lead to lots of good tidings. It would lead to increased financial strength and make both Gores Guggenheim and Polestar future-proof with accelerated growth. If all this doesn't make you believe the price of Gores Guggenheim stock will skyrocket, then perhaps the forecast of Polestar to produce and sell over 65,000 vehicles should. When you critically look at this, you'll see that there's an increase in the prospect and revenue of Polestar as compared to other electric vehicle companies like Lucid Motors. The company's forecast for 2022 is to reach $3.2 billion in revenues and reach about 65,000 sales. Mind you, this value is only the projected amount of Polestar 2 to be sold. With a revenue this size, way above $3 billion, it's expected that Polestar's gross profit will go as high as $500 million, which is about a 16% improvement on their year-on-year growth. The merger, in combination with Polestar's expected sales growth, is expected to drive Gores Guggenheim stock to $100 as growth might extend even to the end of 2025. Prior to the merger, Polestar was already projected to have a very lucrative addressable market, which is expected to be as high as $280 to $320 billion by the end of 2025. In case you didn't know, this addressable market plays an important role in taking Gores Guggenheim stock to $100. The lucrative addressable market of Polestar is very vital to investors and analysts. More importantly, the bullish ones. It acts as the key catalyst that drives informed decisions and investment. Gores Guggenheim has maintained a very impressive track record. So far, it has closed and announced almost 9 business combinations and deals. Its merger with Polestar is a gigantic deal because it's rare to see special purpose acquisition companies whose valuation exceed $20 billion. Not to forget, the gross proceeds are more than $1 billion, and putting this amount of cash into the expansion of Polestar will make achieving the future Polestar models possible, and faster. That is the Polestar 3, 4, and 5. Many investors and traders believe that since the reverse merger deal is not yet completed, investing in Gores Guggenheim stock right now would lead to a lock or dead money. Hence the need to buy later. But don't be those investors. Let's place this side by side with Lucid Motors stock, and how understanding the pattern in Lucid Motors stock price can help you visualize the growth pattern of Gores Guggenheim stock. During the first announcement of Lucid's pre-merger, the stock price soared to as high as $60, and after 2 months or thereabouts, it sunk to a value below $20 and leveled for a month or so. But towards the proposed merger date, the stock price fired up, soaring through the $20 average. It hit $27 and then $30, and after a while, $50, after it fell drastically during the merger. Gores Guggenheim stock has never witnessed volatility as high as this, but this special purpose acquisition company listing at the time of producing this video had outstanding shares of up to 80 million. And after the merger, the combined outstanding shares will be more than 2.1 billion, which is 500 million shares more than Lucid's 1.6 billion outstanding shares, which is more than a 130% increase. Now, imagine this increase in the playout of Gores Guggenheim stock after the merger. Remember, after Lucid's lowest average of 10s, it skyrocketed to around $50. Now imagine 130% of that. That is more than $100 the Gores Guggenheim stock is expected to hit. If the occurrence of Lucid's stock rise and fall can be accepted as a blueprint, then Gores Guggenheim stock is estimated to top out from its low 10s and mid-20s before the merger with Polestar. Although this is expected to be mild with the merger, attaining $100 will be possible. However, certain factors which are fundamental to Gores Guggenheim stocks can lead you to believe that Gores Guggenheim stocks might likely not follow the blueprint of Lucid. One other reason Gores Guggenheim might reach $100 is because of Polestar's investor presentation, which is way higher than other competitors like Lucid and Rivian Motors. There are several bullish signals surrounding Gores Guggenheim stocks, which makes Gores Guggenheim stock a good buy. But then again, there is Polestar's connection with Geely, and by extension, their relationship with China. But it's not a Chinese company, so you should not expect the difference that exists between the United States and Chinese companies' price-to-earnings ratios to exist between them. Did you know that as of last year's end, the price-to-earning ratio of Amazon was 3 times higher than that of Alibaba? With all this, it would be wrong to consider Gores Guggenheim as a Chinese company. It has its roots in Sweden, and, as we mentioned earlier, is structured as an entity with variable interest. This increases Polestar's global reach, its sales reach, and its revenue. And also, this makes it easy to place Polestar in the same rank as Tesla, or better still, a mini Tesla. And if they can make good on the expected growth projection, then buying a Polestar stock now, so really a GGPI stock, will be like buying a Tesla stock back when it was below a $50 billion market valuation as far back as 2015. Imagine what that would mean for Gores Guggenheim. So what do you think? Is Gores Guggenheim stock a good buy? Would it ever hit a $100 price? Do well to let us know in the comments section below. If you liked our video, then go ahead and click on the thumbs up, subscribe, and the bell icon to get notified of our new and upcoming videos. You can also check out our other videos. Goodbye!